Okay, so if you're an investor today, you know what I'm talking about. You're just drowning in a tidal wave of information. I mean, every single second, there's a new headline, a new data point, a new tweet just screaming for your attention. So, how in the world do you separate the real signals, the stuff that actually matters, from all that distracting noise? Well, in this explainer, we're going to build a framework to help you do exactly that. All right, let's just dive right in. First, I want you to feel what this wall of noise is really like. We're going to look at a quick snapshot of the kind of real-time information that's just bombarding investors day in and day out. And spoiler alert, it feels chaotic because, well, it is chaotic. So right away, your eyes are going to get pulled to something like this. A stock PRSO that's up over 150% in a single day. And look at the volume, nearly 360 million shares. That's just pure adrenaline. It creates this instant, powerful feeling of, oh man, I'm missing out. But it tells you pretty much nothing about the actual company. And then, bam, geopolitics just crashes the party. A headline like this about international tension has absolutely nothing to do with a company's balance sheet, right? But it sends these waves of uncertainty through the entire market. You see, it's an emotional trigger. It's designed to get a reaction out of you, not to get you thinking rationally. And this is where the crowd is hanging out. I mean, just look at DXAST, almost 600 million shares traded. This tells you exactly where the action is right this second, where everyone's attention is focused. But is it smart money or is it just panic and pure speculation? Just from this one table, no way to tell. Now, this is a whole different flavor of attention. This is the social media wave. Stocks like HIMS and PRSO are the ones getting the most new followers. This is a measure of rising social hype. You can feel a story building, a wave of excitement. But is there anything real underneath it, or is it just, today's flavor of the week? So yeah, this brings us right back to the big question. With all this conflicting, high-volume, emotional stuff flying at you from every direction, how on earth do you find the information that actually matters for your long-term success? Okay, so to answer that, let's just take a deep breath. Let's pivot to a completely different kind of signal. Instead of the frantic, chaotic pace of the daily market, we're going to slow way, way down and look at the calm, deliberate moves of some of the world's greatest long-term investors. See, this isn't about what's hot for 5 minutes. This is a list built on deep conviction. These are the companies that legends, guys like Warren Buffett and other top managers, have bet on for the long haul. You see names you know, Microsoft, Alphabet, Amazon. These are actual businesses, not just flashing tickers. This signal is slow, it's steady, and it's based on a ton of research. And what's so cool about this is you get to see the mindset behind all that data. Like the investing legend Peter Lynch says here, real success comes from buying wisely when everyone else is panicking. It's a whole philosophy of patience, not a knee-jerk reaction to a daily headline. And look, we're not just talking about one person's gut feeling here. Dataroma tracks the portfolios of 82 of these super investors, so you can think of it like getting advice from a council of 82 of the most successful, proven minds in the entire investing world. And we get to see what they all believe in. And this is maybe one of the most powerful signals they look for: insider buying. This is when the people actually running the company are buying their own stock with their own money in huge amounts. Take W.R. Berkley here. 94 separate buys from insiders totaling over $700 million. I mean, come on, that is a massive vote of confidence from the people who know the company best. All right, so on one hand, you've got this slow, steady, patient signal from the masters. Now let's snap right back to the fast, immediate pulse of the daily market, where you've got two very different signals that are constantly at war for your attention. Think of it like this. On one side, you have a platform like FinViz. That's the dashboard. It's raw data, it's charts, it's technicals. On the other side, you have StockTwits. That's the town square. It's all about social sentiment, what people are feeling, the hype. It's the data versus the crowd. So let's start with the data side, what you might call the smart money signal. Here on FinViz, we see an insider at a company called GENB just made a $75 million purchase of their own company stock. This isn't an opinion. This is a cold, hard fact. It's a signal based on a huge financial action. Okay, now flip over to the other side, the crowd. On platforms like StockTwits, the most active list shows you what everyone is talking about and trading right this second. This is the crowd money signal. So here's the crucial question. Do these two signals, the smart money and the crowd money, point in the same direction? And here's the kicker. A lot of the time, they really don't. And this is where it gets really fascinating, right? The hard data was negative news. The company didn't make it into the S&P 500. But the crowd sentiment tells a totally different story. It's one of belief, of defiance. It just goes to show you how a powerful story, a narrative, can take on a life of its own, totally separate from the hard data. So, okay, you've got all these signals pulling you in different directions. Long-term conviction versus short-term hype, cold, hard data versus hot emotional sentiment. The key isn't trying to pick the right one and ignore all the others. The key is to develop a filter. You need to build your own personal investing compass. And that compass, that filter, it's what we call an investing philosophy. See, it's not about finding the one best signal out there. It's about creating a set of guiding principles for yourself that helps you look at all the signals and decide what to act on, and probably more importantly, what to just flat out ignore. Let's look at a really great example from the Motley Fool. Their philosophy is beautifully simple and clear. Buy a bunch of different companies, plan to hold them for at least 5 years, keep adding new money, don't panic and sell when things get rocky, let your best ideas keep growing. A rule set like this is basically the perfect antidote to the chaos of the daily market noise. In fact, you can basically boil that whole philosophy down into 3 super simple, actionable steps. Number 1, diversify broadly. Don't put all your eggs in one basket. Number 2, think long-term. Think in years, not in days or weeks. And number 3, stay disciplined. Stick to your plan, even when the market gets scary. That's it. That's how you build your filter. So in the end, everything you see, every headline, every stock chart, it all comes down to this one question you have to ask yourself. Is this a real signal that actually aligns with my philosophy, or is it just more noise trying to distract me? And that really is the final, and honestly, the most important question of all. The goal here isn't to just copy Warren Buffett or to chase the crowd on social media. It's to understand all these different signals so that you can consciously and confidently decide which ones you will allow to guide your own journey. So what's going to be on your compass?